What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 42. These are the trades that I made for December the 8th, 2023. So let's go ahead and get into it. First and foremost, let's talk about yesterday's closing price. Now, the line isn't shown on the chart, so you just going to have to roll with me and remember the price. So that price is going to be very important. That price level is 36,162. So let's go ahead and talk about trades 1 through 4. So as you probably know, we had non-farm payrolls that came out on Friday, and that led to this very large move down and then all the way back up that we're seeing right here at 8:30. So let's go ahead and talk about this. Now, before we get into the trades, I just want to talk about mindset and why that's so important, because over these past few days where we haven't really had too much major news, just regular high impact news, but nothing like serious that's going to give you a move like what we saw today. So I was really just coming into the market on those days with the mentality of, look, I'm going to take what the market gives me, whatever is available. I'm going to look for my setup, and whatever is there, that's what I'll do. That's what I'll take. Now, today was a little bit different. My mindset changed up because I knew that it was going to be a lot of volatility and a lot of movement. So I came in with the mindset that, okay, today is the day where I can really make some outsized gains. But I think I need to prioritize the risk first instead of focusing on the reward, because sometimes you can get so caught up in what you can make that you might not respect the risk as much as you can. And sometimes that can lead to loss, especially when the market is moving really fast like today. So I think it's just really important to stay in the right mindset and still remember that even though the market is giving you plenty of opportunities, you still have to make sure you make the right decisions at all times. So let's go ahead and talk about trades 1 through 4. So let's read the notes. Right here I said it's important to stick to your rules. It's tougher to stay disciplined when the market is moving quickly, but it is a necessary requirement for success. And that's something that I've been learning not only today, but almost every other day for these past 3 months. Every time I stray away from my rules, I have a very tough day. Every time I follow my rules and stick to my plan, I have a decent day. And that formula really hasn't changed all that much. It remains constant and it remains the same. So let's zoom in and talk about trades 1 through 4. But before we get there, let's talk about what happened when the initial news announcement came out. So we started up here, right, at around 36,110, fell down all the way to a low of around 36,010. So a good little move off of the open on the first candle. This candle pulled back up and closed right here. The next candle pushed down, and then this candle moved up. So really, this was a higher low, and that's why I circled it up, drew my level of support across it, and I should have been going long as prices came back to retest this level and then moved up. The only thing was I was just a little bit hesitant. I was kind of scared because I saw the fact that the price action was moving, and even though I knew that a higher low should usually lead to higher prices, especially after a big downtrend like this, I just was a little bit too scared and didn't get into the position. But I think in times like this, when the market is really moving, I can't be scared to take my setup. If I see my perfect trade, I got to get in, because I would have been able to ride prices up and definitely reach my scalp target. And I would have had another chance to enter long as prices spike back above the higher low support after this false breakout. And then on this move, this is when they really started moving back up, moved all the way up by 100 points, well, really 160, because we came all the way back up to retest, not exactly yesterday's closing price at 162, but we came close enough, and we came to 159, which is where I started to take trades 1 through 4. And yesterday's closing price played a very big factor in the decisions that I made, because I saw the fact that we made higher low 1, higher low 2, higher low 3, higher low 4, and higher low 5. I tried to trade all of these higher lows, but I never got the retest that I really wanted. So I started to get a little bit of FOMO because I saw how strong the market was, and I felt like I knew exactly where it was going. It was going back up to test yesterday's closing price at 162. That's what I was thinking. So that's what I acted on. Now, if I have that idea, that's a cool idea to have, but I still have to always remember that if I want to play the move back up to yesterday's closing price, I can only play that move if I see my setup and I see that higher low form. Now, if you look at what I did right here on trades 1, 2, and 3, I went long here at the top of the swing in expectations that that price would be hit, because when I went long, we were probably maybe 15 to 17 points away from yesterday's closing price. So I felt like with the momentum that was leading prices up into this area, they should continue moving up. But that's me taking a trade just based on pure hope. There were no technical signs that indicated to me that I should be getting in long right here at all. One of my biggest rules is to not buy at the highest price of the swing. And if you look at the swing up until this point right here, this was the highest price. So me going long right here is just not a good reason to get into the trade. And I think when the market is moving, you can't let your rules get broken, and you can't let your discipline start to fall off, because you see the opportunity and you're like, oh man, I can get that trade. That's my trade. I can make that. I know where it's going. Let me take it. No, 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 no. Remember what I said yesterday on the previous stream. I said that the market is going to be open for 6.5 hours. So you don't have to get caught up trying to force a trade within the first 30 minutes of the session opening. Today was an extended session because it really started at 8:30. So we had 7.5 hours in today's session. And I took 4 losses back to back to back within the first 15 minutes, not even 30 minutes after the market opened at 8:30 today. So this comes back to being patient, like I was talking about yesterday, and also coming back to being disciplined. I got to follow my rules, because if we look at this overall juncture, there was a higher low right here. Look at that. That's beautiful, isn't it? So if I would have been able to go long at this higher low, I wouldn't have been able to take prices all the way back up to yesterday's closing price, because interestingly enough, they actually never got there, which is a very bearish sign in and of itself. And I would have been able to at least take prices back up to around maybe 15 to 20 points higher and still get a nice little trade. You know, that's all I want to do when I'm trading pre-market action. I just want to catch one good trade and then come back at the open and do what I was supposed to. So I had that opportunity here, but you know, it comes back to making the right decisions. The higher low was there, but I went long towards the top. When the higher low is in the market and the higher low is present, you always got to make sure you go long towards that bottom level of support as close as you can to support, and then take prices back up. So that was really where I went wrong right here. 3 bad trades right here, and then came back on 4. I went long here initially, and that worked out for the most part, but I added to my position when prices started to go in my direction, because I just assumed that, okay, now they're making that move back up to yesterday's closing price. But I made a video a long time ago, long time ago, where I said that the major levels on the chart are not something that you should get married to. Just because you believe that prices are going there doesn't mean that it's 100% guaranteed to happen. You got to make sure that you play the market for what it is and not what you want it to be. And that's so important. And I think that's one of the biggest lessons that I took away from this overall entire junction up here at 1 through 4. So the opportunity was there, but just because it's there doesn't mean that you can automatically grab it. You have to execute your plan the right way in order to maximize on that opportunity that you're looking for. And that's so crucial. So let's go ahead and move on to what happened when the market opened. So I came back at trade 5 and I made a good decision right here. I saw the higher low that got established once we broke back above support. So I said, okay, we initially kind of sold off past that higher low, but we spiked back up through that entry price. So I went long here as prices tested the support level of the prior higher low, and I was able to catch my scalp target right there. So that's not too bad. That's exactly what I want to look for when it comes to that higher low setup. Now, as the market continued on, I continued to look for my setups, didn't really get them until trade 6 came around. So at 6, I did go long here based on the higher low, but I exited quickly when I saw the multiple wicks being formed at this level. And this is something I've been picking up on these past couple of weeks, which is the strength of the higher low. A higher low is stronger when the candles that comprise the higher low combination do not have wicks on almost every candle. And that's exactly what we saw right here. We had wick 1, 2, 3, and 4 as we started to make this higher low, which just shows you that it's indecision in the market. And one of the biggest factors that drives the higher low strategy to be successful is decisiveness. You need to have everybody in the market pretty much on the same page at that specific time in order for the market to go up. And if you don't see those signs starting to happen, you need to just go ahead and get out before things get ugly. And I'm glad I was able to just get out quickly at 6, because prices would have definitely came down and hit my stop if I wasn't able to get out very quickly. So I think that's a good decision right there. So let's just keep track of the decisions that I've been making, because eventually it's going to be a turning point where I kind of fall off the cliff a little bit. And I want to walk us through these trades so we can pinpoint exactly where things turned around and exactly what my thinking was, so that way we can fix it going forward in the future, so that I try my best not to make that decision again. So on 5, Followed my trading plan, did a good job. 6, followed my trading plan, saw that the trade I was in wasn't going to work, did a good job. Now 7 and 8, I went long here based off of the higher low support. Now this trade ran up by a lot on trade 8, but first came back to my break even stop. So let's go ahead and zoom in and talk about that a little bit, because right here I went long based on the higher low. That's exactly what I should do. Now my stop was a little bit, a little bit too tight, but it was my normal standard stop that I use. So sometimes you just got to take a loss. I had the best entry I believe that I could possibly have, so I'm okay with taking this first loss at 7. But then as prices spike back through my original entry price, you guys know my rule. If everything lines up and the market still looks good, I get back into that same trade. So that's what I did right here at trade 8. And this trade ran from, I want to say, hold on, I got in around 240. The move ran all the way up to around 290 and almost touched 300. So I could have had a nice maybe 40 to 45 points off of this trade, because I did not plan on taking profits when they came back up to the top of structure. As you saw, they did do that, and then they came back to break even. But I had a very good feeling based on the momentum that we were seeing in the market that this was going to be a very strong trending day to the upside, and that the market was going to continue up a lot higher from here. So I just wanted to take the trade right here. I had a good entry and I just wanted to hold it. That's one of the biggest things I learned from a lot of the other trending days that I participated in. I look back on the chart and I said, wow, if I would have just held some of these trades from the higher low, I could have made outsized returns. So that's what I was aiming for right here at 8, but it just didn't play out that way. And then I saw the market continue all the way up back to the same target that I was aiming for after it stopped me out for break even. And I think this right here, this was the turning point that I was talking about as far as my mental focus and my mental discipline goes, because that trade really crushed my spirit right there, because I had a little bit of losses from 1 through 4. Trade 5 came back and helped me make a lot of that back. So I was in striking position. Trade 6, that was break even. That wasn't that bad. Then trade 7, that put me a little bit more into drawdown. So I was starting to get a little bit nervous, like, okay, Ty, you see the opportunity here. Why are we still taking losses? Why are we still losing? We need to do better. Let's make good decisions. So I made that good decision on 8, and I was excited because if this trade would have hit, I would have made back all of those losses plus more on the same regular standard contract size that I always trade. So I was like, okay, perfect. This is my opportunity. And once that opportunity came back to break even and I wasn't able to get back in, I just felt like, I don't know, I just felt crushed. Like, man, that was my chance and I blew it. And that's how I felt in the moment. But now that I had some time to sleep on it and really think about it, this trade 7 and 8, this happened at like 10:10. That's not even an hour into the market after the market opened at 9:30. So that goes back to me saying that, hey, you don't have to get it all right here. If it doesn't pan out and you don't get what you want, it's all good. Look what happened. Did the market stop moving after trade 7 and 8? No. It was still opportunity and still plenty of trades to be taken and plenty of higher lows for me to take advantage of. So when I'm in the moment, I always got to remember, okay, this trade might have worked out for me. Maybe it didn't. But no matter what the results were, it's more opportunity to be had. So let me not get into my head too much and let me just focus on taking the next best trade and I should be good. So with that in mind, I feel like that was the turning point right there at 7 and 8. So let's talk about 9 and 10 and talk about what transpired. So at 9, I did go long based on the higher low. But if we read the notes, the biggest thing I learned right here is that you can't just buy every higher low. And that's something that I already knew. You know, I'm very cognizant of the fact that sometimes you have strong higher lows and sometimes you have weaker higher lows. All higher lows are not built the same. So you can't just buy all of the higher lows like I did today. Even if the trend is strong, I still have to use good discretion in my trade selection. And that's so important because on trade 9, it made sense for me to go long right here as prices came back to test the higher low. Now, I think the mistake that I made was the fact that I didn't get out at break even though I saw signs in the market that told me that the uptrend was not about to really do what I thought it was about to do, at least not at this point in time. This was not the right level of support to go long from. The signal that indicated that to me was this lower high right here at this blue circle up top. Notice how once we made this lower high, prices never broke back above it and prices actually started a pretty nice downtrend all the way back to this major level of support instead of this one at the top. So I had 1, 2, 3, 4, 5 minutes to be able to get out at break even, but I just kept holding on to the trade because I said, man, you know what? I made the same mistake yesterday where I said, man, I think the trend is strong enough that it'll override this lower high. But you have to respect price action. Price action will not lie to you. Price action is going to tell you exactly where the market wants to go. And sometimes it's going to give you a good chance to say, you know what? I'm in a trade, but I see that price action is turning against me from what I originally believed in. So let me get out before things get ugly. That's the decision I should have made at 9, but I ended up having to take that loss right there. And when we go back to the mental mentality that I was in at that time, trade 9 only made it worse, because now I felt like, wow, now I'm really in drawdown. I'm really fighting to get back to just break even. And that just affected my mind state a whole lot, because then I started to get desperate. I started trying to force trades that weren't there. And that's pretty much what happened at trades 10, 11, and 12. So let's go through those and discuss that. So at 10, let's read the notes. It says, I was desperate for a good trade right here. I went long at the bottom of a mini zone, but I ignored the strong selling momentum that was coming in. And that's so important, because when it comes to trading the zone, yes, you want to go low. You want to go long towards the lows of the zone and take it back up to the top. But one of the things that I've learned about zones is that you want to eliminate one of those selections in terms of which type of trade you want to take. So you can either go long or you can go short. Now, depending on which way prices were moving before that zone was established, you can eliminate one of those options. So if prices were moving down before the zone was established, you can eliminate the long option and instead just trade that zone from the top level of resistance and look to go short, because that's the direction that the momentum was in before the range happened. So more than likely, that's the direction that the momentum will continue in after the range is broken. And that's why I went wrong on trade 10. On trade 10, I went long right here. Should have been going short, because we did have lower high number 1 that we talked about from trade 9, followed by lower high number 2 that we established once we broke back down past support and then came back to retest it. So if anything, this is where I should have been going short. And you know, that's a tough lesson to learn. That's something I already knew, and I hated that I had to make that mistake, but things happen for a reason, and I learned my lesson from trade 10. So then we come back on 11 and 12, and right here, if we read the notes, it says, I was very desperate right here, and that's very true. I shorted here based on nothing but a break of support and a little bit of hope, but I have to stick to the plan no matter what, because one thing I can tell you from a lot of bad experience is that trading on hope is not the way you want to go. Trading on hope will get your feelings hurt, like it did right here on 11 and 12, because you have to make sure that you trade based on valid signals in the market. It's not about emotion. It's not about how you feel. It's about making the right decisions based on your trading plan. Now, right here, we broke past support, had a long tail candle wick that came back up to establish a higher low. This is actually one of the most lucrative higher low setups that you could possibly find, where you had that long tail candle wick after a strong down move and an overall uptrend. Prices come back to a major level of support, had that long tail candle wick with the higher low. They come back and retest it, and then they move up. This move spanned from 200 all the way back up to 280. So this was a very lucrative move right here, but because I was just in the wrong mindset, I played it wrong. I was trying to force something that wasn't there instead of just being patient enough to let the market come to me. I was trying to chase the market and say, okay, we broke the support level. We came back to retest it. Let me go short right there. That's not even a trade that I take. That's a trade that works. I've seen that trade work a lot of times in the market. If you go back and look at price action throughout any chart, really, you can see that happening a lot, where prices break past support, come back and retest it, and then the downtrend continues once they get rejected from that support that is now turned back into resistance. And even though that trade works, that's not a setup that I take. When I look to go short, I look to go short based on the failure of a higher low, and that's it. So for me to take that trade right here, that's just outside of my trading plan, not something that I should have been doing in the first place. And I was just trying to force it, you know. But if I would have been patient enough to let the market come back, retest this higher low like it did right here at trade 12 where I went short, I should have went long here, and I would have been able to catch my scalp target, or maybe even more, and take prices back up to the top of structure up here. But that's not what happened. On trade 11, I shorted here, took a loss, came back on trade 12, tried to force it one more time because I saw this double top 1 and 2 followed by a lower high. So I tried to short, and that would make sense in any other market scenario. But when it comes to a day where the uptrend is super strong, you do not want to take that first short entry that looks good after a very good extended pullback, because you got to remember what the overall market context is. Everybody, for the most part, the majority of the market has been buying so far during this uptrend. So that means that if there was a sell-off, most buyers would not be looking to exit their positions unless they had to. Instead, most buyers would probably be looking for a better price to go long from, so that way they can have a bigger trade the next time that the market goes up. So the exact same place that I usually would think about going short in a very strong uptrend is usually the exact same place where all of the buyers are coming in looking to go long. And that's exactly what we saw at this higher low setup between 11 and 12. So 12 would have been a good decision in a downtrending market. But in an uptrending market like this, you got to avoid really any short trades at all. Even though the short trades might be there, you just got to pick one side of the market that's dominant and stick to that. And that way you increase the probabilities of you coming out on the winning side of the trade. And that's really the biggest lessons I learned between trades 10, 11, and 12. So then we move on to 13. Now on 13, I got my mind right a little bit. I didn't make a bad decision initially because I saw a higher low get formed on a prior level of support that acted as a higher low support level on trade number 9. So anytime you get back up to a prior level that you broke down from, and then you make a second higher low a little bit later, that makes sense. And that tells you that the buyers are in the market, and that more than likely you have a better chance of making money if you're on the long side. Combine that with the fact that I have a higher low right here, that led to me going long at trade 13. Great entry based on my strategy. But if we read the notes, it says this was a good entry initially, but I got greedy and I added to the position at the highest price of the day. And of course, I took a loss right here. Now, that was just probably, when it comes to my trading plan, this is probably the worst decision I could make. And it goes back to the same mistakes that I made at trades 1 through 4. I saw the market going up and I just figured that, okay, the uptrend is about to resume. It's about to be a big move higher. So let me get in before I miss it. But there it is again, that fear of missing out. That fear of missing out, that FOMO, it'll drive you crazy in the market if you let it get a hold of you and if you let it control you. You got to always remember to take your setups from the best possible levels, especially when it comes to a very strong uptrend, because from a visual perspective, it looks like this was an easy chart to trade in hindsight. But in real time, you still got to remember that the market is never easy. Because it looks easy doesn't mean that it is. The market will never sit down and just give you points. Every point that you get from the Dow Jones, you have to earn it. And nothing is going to come easy, which means that you got to take the best setup. So when I added to my position right here, that was just the wrong move. If anything, I should have just held on to trade 13, saw how that played out. And then once we made this next higher low right here, then technically I could have went long. But this, when I look at it, really wasn't a higher low. Look at this right here. This was the peak for this entire upswing that started from this long tail candle wick down here from trade 11. We pushed all the way up, pulled down, was never able to get back up to the highs from that wick that we established right there. So this right here is actually a lower high. Look at how I have it circled up as a higher low. So that right there is me reading the market wrong. And I think back to my mental mentality, the fact that I was so desperate for a winning trade kind of influenced my decisions right here and just made me start trying to force things that were not there. And that was really my downfall throughout today's session from part 1 and part 2. Now, after this, I didn't trade for a long time. I think this trade was at 11 o'clock. I just took a very long extended break, just tried to think about what went wrong. And then I came back in the afternoon looking to just find one good trade and see what I could do. So let's talk about part 3 from this from yesterday afternoon. So I came in at trade 14. I took a long break, came back, and then I went long at the support level of a prior higher low. Exactly what I'm supposed to do. It's a good entry, good trade. My break even got hit on this one, and that's tough. But you know what? That's something that I'm willing to roll with. This right here is a trade I should take every time. This is exactly how you play the higher low setup. We were in an uptrend, had a higher low that got established. Prices came back, retested that level. I looked to go long. And if I would have held this trade, this is what I talked about earlier. In days like these, when you hold trades from the higher low, you can be very successful and catch a very, very, very good move. So that's what I was aiming for right here, but just wasn't able to catch it right there. And that's okay. I'm not mad at that. So prices continued up, continued to make higher highs and higher lows. And then we come back to trade 15. Now trades 15 through 20, it was a lot going on right here, and I got a lot to discuss. And when I talk about being able to remain mentally disciplined and mentally focused, it's gonna be a very good lesson about that. So let's talk about 15. Now, 15, I took a quick scalp here, right? I saw prices come all the way back to retest a major level of support from a prior higher low. I know that when the trend is up, that's usually what the market wants to do. It'll make a high and then look like prices are coming back to start a downtrend, but really it's just coming back to retest the most major and probably the lowest level of support, and then it continues the uptrend. So with that in mind, I did go long at 15. Now, that was a good entry and a good decision by me, but the only thing was I took the scalp with maximum size. Normally I trade one contract. I've been trading one contract for the past like month and maybe month and a half now. So that's what I'm used to, one contract. But I came back on this trade right here at 15, and I traded 10 contracts, not 2, not 3, not even 5, but 10 contracts. So that was 10 times the amount of the normal size that I trade, which is just way too risky. That was a terrible decision. I can't even sugarcoat that one. That was just a bad trade right there, because yeah, this trade did work. But what about those times when this trade right here, that quick scalp with maximum size, is not going to work? Because when I'm taking a quick scalp, I think I got 80 to 85. So I got 5 points on this scalp. If I have a 5-point profit target, the lowest stop loss that I can have is 5 points. A 5-point stop loss on the Dow Jones, you pretty much you almost guaranteeing the fact that you will take a loss, because you almost have to be absolutely perfect on your entry in order for it to work for you. And sometimes that can work, and that'll give you a false sense of confidence and make you think that, oh, okay, yeah, I can do this at every major level and it'll work for me and I can make all that profit back, trade quick scalps on maximum size. It's an easy trap to fall into, but that's why I titled this video, focus on the risk first and the reward second, because on these trades, I was trading maximum size from 15 to 20, focusing on what I could make, but not focusing on what the negatives would be if I took losses on these trades, because I'm used to taking a 13-point loss for my normal stop target. On one contract, that's $65. Now, if I trade 10 contracts, that's $5 a point, so that's $50 a point, and I'm risking like 5 to 6 points on my stop loss, that's about 250 to 300 points plus commissions on every loss that I would have to take, which means that that's almost 5 times the amount of the loss that I would take on a normal one contract trade with a normal stop loss. And that's just way too much risk for me. And if I was already kind of mentally broken in this session, taking a big loss like that would not help fix that problem. So let's talk about, so that was trade 15. So let's talk about this zone that got established before 16 and 20 actually happened. So what's interesting is that we were in an uptrend, but we did kind of establish a zone right here for a little bit of time until we broke out. Now, what I want to talk about is the fact that we established higher lows within this zone, which is very intriguing because usually you don't see that. Usually you'll see prices hit the bottom of the zone and then they'll move all the way back up, usually on a straight shot most of the time. But for us to see higher lows, that just gave us better levels of support to play the zone from. So notice how this higher low right here in the middle of the zone, it acted as a good level of support for the higher low that followed right here and the higher low that followed right here. Now I want to take you back to yesterday. Now look at where we were at on December 8th. Well, when I say yesterday, I really mean Thursday. So look at where we were at on Friday, December the 8th. We were in the final few hours before the market closed. This was 2 o'clock to 4 o'clock. We had a zone that formed in the last hour, and then that zone got respected. So let's go back to Thursday and let's look at the same scenario from the last few hours of the market. This zone occurred between 1 o'clock and 3:15, and look at what happened. It's a lot that went on, but what I really want to focus on is D, E, and higher low B. Notice how higher low B got established in the middle of the zone, kind of towards the middle, and from that point forward, it acted as a good support level to go long from this next higher low that followed by this third higher low that followed after. And then eventually, once the prices broke out at D, prices came back to retest that same support level from higher low B. That retest happened at E, and then the market broke past the zone and continued to sell off. So if we go back to today's session, we had almost of an exact carbon copy of what we saw yesterday. So this higher low right here, just for the sake of this video, let's call this higher low B. So at higher low B right here, we saw that level of support that extended across the zone, followed by this higher low right here, which also extended across the zone. And both of those acted as levels of resistance when the market finally broke through and then came back to retest the market. So let's talk about trades 16 through 20. So at 16 and 20, I went short right here because I was looking at that higher low from higher low B that extended across the middle of the zone. And I was expecting for prices to, once they broke back into the zone, retested the top of the zone and started moving down, I expected for them to come all the way back to the zone immediately. So I just put my short entry right here, expecting for prices to break past this higher low and then hit the bottom of the zone. But I really didn't have any confirmation on this trade because there wasn't a lower high that got established within the zone just quite yet. So I was a little bit too early on that trade, which would have been a normal loss that I would have been willing to take. But I had maximum size on this trade, and this trade right here pretty much erased all of the gains that I made from 15. So now I'm back at the same spot that I was before in the major drawdown. I don't think I talked about that, but let's discuss that, because up until trade 15, I was down by 110 points. Now let's talk about my daily loss limits, because this is also important. My daily loss limit is 40 points a day. If I hit 40, I gotta go, because whatever I'm doing is not working. And anytime I ever hit 40 points in losses, it usually never gets better. Today is another perfect example of why that's the case, because if I'm down 40, it means that something is wrong mentally and I gotta fix it and then come back and try and make it a little bit better the next day. But I definitely gotta stop on that specific day. Now today, well, on Friday, I ended up taking more trades and more trades like I've been showing you, and I got to a point where ultimately at the highest point I was down by 112 points. Remember, my daily loss limit is 40 points, so I almost tripled that, and that's just, I can't even make any excuses about that. That's just very bad decision making by me, very bad usage of my discipline, and just something that I cannot do. Now luckily I was able to finish the day off with only 19 points and losses in total, but how I got to that negative 19 is just something that I can't do. So that's important to talk about. So once I took the loss on 16, I was pretty much back to where I was, down by 112 points. If you're basing it on one contract, so $5 a point, 112, y'all can do the math and see how much I was down by. So 16 really just put me back at break even. So then I really, well, not at break even, but where I was before. So then I really got frustrated and I really got desperate like I was before. And I was like, nah, this trade has to work for me. So I took the same trade again as it came back down to that level, and I got the exact same results on trade 17. So I was like, all right, man, I don't know what's going on. So then prices came back. They retested the top of the zone one more time, created a second lower high in comparison to this first one that got established on the retest of the top of the zone. So then I said, okay, cool. This is kind of starting to look like the move that I saw from yesterday. So I'm so glad that I studied that move and actually took some notes on it, because we saw the exact same thing today, and that was actually the saving grace that allowed me to undo this very, very, very ugly losing day. So I came back on this trade right here and pretty much took the same trade as 16 through 17, but this was the one time where it actually worked. So I ain't gonna lie, I got a little bit lucky on that one, but I did see confirmation, so I'm not gonna say it was all luck, but definitely played a part. And I took that back down to the closing price for this higher low from before. So that was trade 16, 17. That was trade 18. So then I come back on trade 19 and I try and short as prices come back to retest this level. Because remember what I told you about from Thursday on December the 7th, 2023, when prices came back to retest E. This was that exact setup that I was looking for right here. Now, because I was trading with the scalp target, my stop loss was definitely super tight. And that ended up having me get stopped out on the exact high for the wick right here. And then I saw prices continue back down. So now not only did I have losses on 16 and 17, I also had losses on 18 as well. So everything I made from the previous trade, pretty much I gave back half of that on this trade right here. So still in negative water, taking a little bit of heat and a lot of drawdown. But then I saw my perfect setup that I was finally aiming for. So notice on this move, when I got stopped out, prices eventually moved in my direction, and then they came back up to retest that prior higher low that we were talking about from B, just like they came back to retest that prior higher low from B on the zone from yesterday. So that's very important. That helped me, and that really just pushed me over the edge and got me back right, because like I was saying before, I traded maximum size on every single last one of these trades, 10 contracts on all of them. So I was able to take this trade on this last move from 290 back down to about 280. So I think it was 292 actually. So a good 12 points on that. And that didn't bring me back into profitable territory, but it did bring me back to the point where I was only down by $100. And that was more than I was hoping for. So I was very happy. I'm like, okay, all in all, in terms of one contract, I'm down by 19 points. That's a loss I'm willing to take. If that's the best loss I can get, let me get out of here and just focus on the fact that things could have went very wrong, but they didn't. And that was pretty much my last trade for the day. But I don't want to sit here and act like it was okay to just make all of these trades that I did. This is something that I could never, ever, ever do again, because I was focusing on the reward and not the risk. I could have blew my account if these trades didn't go my way. And that's just not the risk you want to take. It's like, okay, if you're having a bad day, just have a bad day. Lock that bad day in. Go back, study your notes, do your trade review, and figure out what went wrong. But don't try and just get it all back and say, look, it's either going to be my best day or my worst day, because that's how I've blown a lot of accounts before. I was funded before in 2019. I had 2 accounts, and I blew both of those with pretty much the same mentality that I had right here. Now, everything that I was doing today, well, on Friday, I knew that these decisions were wrong. I knew that these were not the right decisions to make. Trading your favorite setup with maximum size, that's not what you want to do right now, Todd, especially when you were already kind of mentally broken a little bit from the trades that you took earlier. You know, I know that's not something that I'm supposed to do, but in the moment, sometimes you can get really caught up in your emotions. And that's why it's so important to make the right decisions from the jump. Because once you start going down that path of doing the wrong thing and making the wrong trades, it's really a slippery slope, because you never know how far down you can go. You know, it's a very deep rabbit hole, and you can keep falling and falling and falling, usually until you blow your account. So you always got to remember that reward is right around the corner, but risk and ruin is also right around the corner, waiting right next to reward. So you got to respect both sides of the market. The upside, the downside, the reward, and the risk. And that's really the biggest takeaway I took away from today. So overall, I would say the biggest lessons that I learned were stick to your trading plan. All of this mental stress that I had to go through on Friday could have been avoided if I came back from the jump on part 1 and started making good trades. Could have took the higher low trade right here, made decent profit on 5, made the right decision on 6. On 7 and 8, I could have made better decisions. On all of these trades, I could have made better decisions. The opportunity was there, but it was up to me to make the right choices, and I just didn't do that. But I learned my lesson. You know, I remember how I felt on Friday, and that is not a feeling that I ever want to feel again. I felt that feeling of failure where you say, dang, I can't believe that's what I just did. You got to be kidding me. Like, nah, this can't be real. I didn't just do that, did I? And you wish you had a time machine where you could go back to the beginning of the day and just make better decisions. Like, if you've been trading long enough, you probably know exactly what I'm talking about. We've all felt that way sometimes, but I'm glad that somehow, some way, I was able to get a second chance, and I'm not going to take that for granted, because overall this week I traded 5 days, but on 2 of those days I didn't stick to my trading plan. The first day where I strayed away from my trading plan, I made money, and I knew that it wasn't okay, but I don't think I really learned my lesson 100% until today came around. Today was like that big wake up call that said, hey, Ty, if you out here playing, you might actually go down and lose this account. So make sure you make the right decisions and don't take this thing lightly. This is very serious. Like, trading is not to be played with. This is a real life game. All right. And if you play the wrong way and you make the wrong decisions, nobody's going to come and save you and say, oh, it's okay, Ty. We're not going to let you blow your account. No. If you want to make the wrong decisions, you'll blow your account and then sit there and say, dang, did I really do that? So you always got to remember, more than anything, you have to stick to your trading plan, because you never know how that's going to affect you going on down the line into the rest of the session. I say that the decisions that you make in the past really determine how you perform in the future, because trading is not just about getting in, taking a trade. It has a lot to do with strategy, but a whole lot more to do with psychology. And if you're not in the right mental mind frame to make good trades, it's going to be a very rough day for you. So that's pretty much all I got for you guys today. I hope you learned a lot about just making the right decisions and not trying to fight the market. Sometimes you just gonna have to take a loss. And if you take that loss, just roll with the punches and say, look, I'm humbled. I learned my lesson. I'm gonna get better from it and come back. But don't try and fight the market and say, no, it has to work for me, because those are the days where it could turn out very bad, like it almost did today. So I hope you guys learned a lot about that, because I definitely did. Now, obviously, I have a whole lot of work to get into this weekend, so I'm gonna go ahead and hit the simulator, hit the back tester, go back through today's session, and just figure out exactly what happened and exactly what I could have done better, and figure out where the best opportunities were and what I can do to get prepared for next week, because today was a very volatile day. But next week we have CPI, PPI, and a Fed on that FOMC announcement on Wednesday. So it's gonna be very volatile, just like it was today. So I got to get these mistakes right so that next week I can capitalize on the opportunity that I know will be present. So that's all I got. I'll see you guys on Monday. But until then, you guys have a good one, study hard, and take it easy.